Subscribe to Mark Tutorial YouTube channel and press this bell icon so you can stay updated with latest videos. Hello friends and welcome to Mark ERP tutorial in which we will discuss on tax clubbing option. Tax clubbing means one journal entry is passed for GST payable after clubbing the input and output which comes of a sale and purchase in particular month. So now let's see the process of tax clubbing in the software, for which we will click on final reports, then to GST returns and register field, and from here click on tax clubbing option from here. So a window of GST tax clubbing will open in which first field is select period. You will select the month from this drop down of select period. Select the month of which you want to do tax clubbing entry. Then next field is avail ITC previous month. ITC means input tax credit. If you want to carry forward the ITC of the previous month in a current month, so you will select yes from this drop down, otherwise keep as it is to this field. Then next field is avail ITC previous FY. FY means financial year. If you want to carry forward the input of previous year in the current year, then select yes in this drop down, otherwise keep it no. Then next field is post in account books, means you only want to generate Excel or you want to post this tax clubbing entry in account books also. If we do it yes and click on OK, so this alert message will be shown to you on the screen. Tax clubbing sheet saved as tax clubbing for this month. Click on OK. Then again one message will be shown to you, tax clubbing entry posted in books. Means the month which you have chosen, tax clubbing entry of that month has been posted in account books. Click on OK. Firstly, we will see Excel sheet that which entry is generated of the month which we have selected. So this kind of Excel sheet will be generated in which this supply details will display your outward part and this inward details displays your purchase of the particular month. Outward details of your whole month will be shown here in supplies column of supply details, which is done under CGST, SGST and IGST, and here you can see closing details. Similarly, the inward of your this month means purchase and you can see the details of that here in inward column, and here you can see closing details. Now you can do the clubbing of software outward and inward. You can see in tax adjustment details your outward, means sale part is shown to you here in balance field, CGST, SGST and IGST. You can see the inward part, means purchase in this adjusted against field. Like purchase is minus from sale and we have to pay the output which is left after the adjustment to the government. So software will auto adjust this software here which you had to do manually. Like you have to submit the output which is left of the sale part. And purchase part means from inward part, the input which is left with you is received from the government. So here software has subtracted the input from output, means firstly CGST payable is adjusted with CGST credit amount. Like you have done the CGST sale of 5,793 rupees 47 paisa in this month. Software has adjusted 4,834 rupees 33 paisa from that, which was your CGST purchase, means inward. So now leftover amount is 959 rupees 14 paisa. Similarly, it will be in SGST outward and inward. This is your SGST payable which you have to pay to your government, and this is your SGST credit which you will get from the government. So software has adjusted this SGST payable with SGST credit amount and the leftover amount will be reflected to you in net payable. Means after adjusting 5,793 rupees 47 paise with 4,834 rupees 33 paise, leftover amount is reflected here as you can see on the screen. Now come to IGST inward and outward. So you will see your IGST is payable in this month, that is 85 rupees 72 paise. Means it was your IGST sale which was in your this month. And IGST credit is your 285 rupees 30 paisa. Means you have done the purchase of this much amount in this month. Your IGST inward was more than your IGST outward for approx 200 rupees. So as purchase gets debited from sale, here software has subtracted IGST credit from IGST payable, means it has adjusted. So after adjusting 85 rupees 72 paise from 285 rupees 30 paise, input will be 199 rupees 58 paise. So as per government norms, you can adjust the leftover input and the amount which is left in IGST inward and outward with the central part of the government, means you can adjust it with CGST sale. And if any of the amount left after that as well, then you can adjust with SGST outward, means with SGST output. So same software as well. After the adjustment of IGST payable and IGST credit, the leftover input 199 rupees 58 paise approx was adjusted with CGST payable firstly, means the amount 959 rupees 14 paise which was left after the adjustment with CGST credit in payable. So after adjusting 199 rupees 58 paise from 959 rupees 14 paise, the leftover amount is 759 rupees 56 paise. Net payable, which you have to pay to the government in the case of CGST, as you can see here. And now no input is left which can be adjusted with SGST output. As we have told you that IGST output is adjusted with IGST input firstly, then if input is left in IGST inward, so input is adjusted with central sale of government, means with CGST outward. And after this, if any input is left in IGST inward, then that input means that amount is adjusted with the leftover output in SGST outward. But now here in SGST, there is no input left for the adjustment. So to do net payable to the government, that is 759 rupees 56 paise of CGST sale plus 959 rupees 14 paise of SGST sale. And you don't need to pay in IGST, that is adjusted already. Here you can see that on which basis tax clubbing is done, means on which tax slab IGST sales and purchase is done and what is debited and credited. And same you can see tax slabs and debit credit in SGST and CGST as well. Basically you can see proper details in this Excel sheet. Supply details means sales, inward details means purchase, and tax adjustment details, that on which basis and how tax can be adjusted, and at last tax clubbing, that on which basis clubbing of taxes is done. Now let's come to the software and we'll see that entry which is posted in the account book, for which you will go to books menu, then to entry books and click on day book from here. Then in this from field we will mention the date, like its entry gets generated at the end of the month. So we will take here 31st August 2018 because in tax clubbing window you have selected the month August and its journal entry gets created as we have told you in beginning. Press enter, again press enter. So you will see in daybook window this is journal entry. Press enter on it. Now you can see this kind of entry will be posted in your daybook. And here you can see net payable same amount is shown to you which was in Excel sheet. And you can see tax slabs and debit amount of sale purchase, credit amount as well, same as Excel sheet. Here in narration you can see remark is mentioned by default that being tax clubbing for the month of August 2018. So friends, by following these simple steps you can do the tax clubbing easily and quickly without manual work. Thanks for watching.